Beautiful. Thank you everyone once again for joining us on another Port Jackson Securities webinar. We're joined by Managing Director and CEO of Elixir Energy, Neil Young. Once again, Neil, thank you for joining us today. We're very grateful to be hearing about Elixir and more or less the updates that have been happening at the moment. Ladies and gentlemen, as you already know, we do a bit of a presentation at the start. If you've got any questions that you're wanting to answer or have answered by Neil, please submit them in the questions tab below and we'll get through to them at the very end. Neil, thank you once again. As you know, it's been a very crazy time in the market for the last couple of months and throughout all of last year. How have you been going? How's the conference up in Brisbane? How's the sentiment about that?
Yeah, I mean, as you say, markets have obviously been smashed by banking crises in America and then around the world. And so what that means in terms of interest rates and economic growth, that's affected oil and gas prices globally, affected sentiment for pretty much the whole market, and we haven't escaped from that. But in terms of the conference in Brisbane, which was focused on mining and energy, and the second being slightly less so, I'd say there was still a intense interest in the forward-facing metals. I mean, copper probably looking as interesting as anything just now, with inflation concerns, being not only concerns, I suppose, reality. Gold is well priced now, and that brings a lot of gold projects to the fore. I think that the other battery metals are still got a great future, but probably they maybe had their run a bit more than copper has. I'm sure they'll run again. In terms of energy, there were two other companies who are pure hydrogen plays, and we have a hydrogen story as well, which we think is exceptional, and I'll talk more about that. And there were a couple of companies with oil plays in North America, which are very solid but mature, produce cash and boring things like that, whereas obviously companies like us have not much cash flow but romance and enormous upside.
Absolutely. And just before we get into things a bit more, as we already know, this information that we're going to present in the webinar is purely for educational purposes and it's not to be taken as any sort of advice. But I think, Neil, we'll run through a bit of presentations. We've already had a few questions being submitted already. I think the audience is pretty excited to get into that, but let's run away with it.
Okay, well, thanks again to Port Jackson for the invitation to speak. Always happy to do so. I'll run through the presentation I made only a couple of days ago, and then we can get into some questions at the end. So thanks everybody for turning up on a Friday. Hopefully I'm not holding you back from your lunch, and I'll get started now. Hopefully I won't have too many technology problems as I press the button to go forward, and I don't. Yeah. So firstly, I'll just give an introduction to Elixir, the company. Now, when I first spoke to Port Jackson, we had at one project, the Nomgon CBM project in Mongolia. We're very pleased to have added two more to that, and we think they both have as enormous potential as our foundation project. And they all have some similarities, and probably the key one is that they are driven by strategic thought about location. Now, methane is expensive to move to customers, hence we went to Mongolia to be beside the world's largest energy importer in the form of China. When it comes to hydrogen, it's far more expensive to move, so location becomes even more important. Then on our Queensland project, we acquired that last year, really after the start of the war initiated in Ukraine, which made gas assets in locations like Australia more valuable, given security of supply concerns from customers such as Japan. And I'll talk more about that. So on the Mongolian project and the Queensland project, we own 100% of both of those. They're both excellently located next door to markets. We have brought a highly experienced technical and commercial team to all of those. And recently in Mongolia, we were the first to initiate an extended pilot production project. And earlier this month, we passed a milestone flow rate of 200,000 cubic feet per day, which we thought was pretty significant. On our hydrogen project, we earlier this year announced that we had matured our partnership with Japan SoftBank Energy from an MOU to a term sheet. The location here, in addition to being proximate to market, has fabulous wind and solar resources. And later this year, we aim to enter into FEED on a major pilot project for hydrogen production in Mongolia. In Queensland, late last year, we booked an initial contingent, i.e. a discovered resource, nearly 400 billion cubic feet. That's pretty material in anybody's sense. To put it in revenue terms, which I know is a bit dodgy, but people like to do it to get a sense of scale. That's $5 billion worth of revenue there. And this location can access international and domestic markets. And at the end of this year, we have a very high impact well called Daydream 2, which again, I'll talk more about in this presentation. So I'll just go over this quickly because many of you will have seen it before. The company, 900 million shares on issue, not a lot of other paper in a fully diluted sense, still relatively strong on a cash basis, share price being fairly sort of flat over the last year and a bit, sort of alternating in around the mid sort of teens. But we think we got the news flow on all our projects this year, which providing the world doesn't go against us, should lead to significant chances of share price appreciation. So on the team, just quickly, Richard Coddy, our chairman, well known to many of you from QGC in particular. Myself, I've been working the Nongon project in Mongolia for many years and have been pleased to leverage that in-country expertise into the hydrogen project in the country. Steve Kellerman, recognized as a global expert in coal seam gas, an ex-colleague of mine at Santos, where he formed their coal seam gas business, and we did a lot of work together, putting together the acreage package, which now supplies the likes of China. Anna Sloboda, she comes from Belarus, which is the opposite end of the older USSR empire compared to Mongolia, so understands a lot about the culture of those sorts of places. She's got a finance background, but has worked in resources of various types in various developing nations, including marketing to Chinese customers. So we think a pretty strong team at the board level. So because I was in Queensland earlier this week, I led off with our Queensland project, which we call the Grandis gas project. For all the Latin scholars out there, you'll know that Grandis basically means very big, which we think this project is in terms of resource size and its potential. So again, location, don't want to bang about on that too much, but I almost can't because it's fundamental to the value of gas projects. We've got about 1,000 square kilometre tenement. It's located close to what's called the Wallumbilla gas hub. That is the primary physical and commercial gas hub in Australia. It connects pipelines that go to the Gladstone port, where gas is exported to East Asian markets, but it also connects Queensland gas resources to the southern states, who are increasingly likely to be short of gas. This is an area where there's been oil and gas activities for many decades, even older than me. Oil was first discovered here in the Mooney oil field in around 1960. So that local people understand that this industry is one that is not threatening and indeed provides local jobs and benefits to the community. There are roads, access is easy, and basically in oil and gas terms, it's pretty much as good as you get when you combine those things. Interestingly, this location is the centre in Queensland for CCS, that's carbon capture and storage. There are a couple of licenses under Queensland law that have been issued to major parties, one of whom is Glencore, who's been doing CO2 injection pilots here. What that means from our point of view is that the co-location of methane and CCS provides a fabulous opportunity to look at blue hydrogen, which is basically separating methane into CO2 and hydrogen, sequestrating the CO2 and selling the hydrogen as a clean product. And the Queensland government is very supportive of hydrogen in all its manifestations. I don't want to go on about that too much, but as I say, location, when you have the two things coinciding, is the optimal thing for considering blue hydrogen. So I mentioned a contingent resource booking, which we announced late last year. This came from work which was undertaken around 10 years ago by BG Group, which is a company that was acquired by Shell, and Shell now sit on the same assets that BG drilled. The work that they did in what is an unconventional deep tight gas play allowed our technical experts to work out what the discovered gas resource was in our license, and that was independently certified by an international auditor called ERC Equipoise. When BG drilled and fracked their wells, they did not frack certain targets which are deep coals, which we plan to do, and we believe in a success case that we should be able to very materially increase this contingent resource. The gas here has associated condensate, that's a valuable light oil, and many geologists believe that this area could be far richer in condensate than we have assessed to date, and the well that we will drill will affirm that later this year. So we are not the only people here. I've mentioned Shell. Santos also have acreage here, both historic, and then a few years ago in 2018, Shell and Santos acquired a block to our immediate south, and Kevin Gallagher, Santos' CEO, was very bullish at the time about its multi-trillion cubic feet potential. That's normally the sort of statements you'd expect to hear from a junior CEO like me, and so when it comes from a company like that, that's pretty material. We understand that Shell plan to drill at least 3 wells in this location this year. That is the same play as us. It's not a separate play. It's the deep Permian gas-bearing sandstones and coals in this location. We are talking to other operators and service providers about sharing things like rig mobilization costs, and that will lead to the firming up of the timing of our well, which I said should be around the end of this year, but ultimately could rest on the timing of the wells that those others plan to drill. Yep. We're very nearly closed the land access agreement with a farmer for our identified initial location. And in this region, as I said, there's strong local support for an industry which is very well established. There's no lock the gate signs out here, that's for sure. Okay. So Daydream 2, it's an appraisal well, as the number 2 signifies there. Daydream 2 was one of the wells that BG drilled around 10 years ago, and that's located about 3 kilometers or so to our west. We will announce further news flow in the build up to the well at the end of this year, which typically on the ASX leads to growing investor interest and resultant share price appreciation. We are looking at a good number of highly promising funding mechanisms, such as farming out and other ones which are available in Australia, such as government support. And again, we will provide news flow about those as they mature. If gas flows from the deep coals from this well, contingent resources could very materially increase. If the flow rate is commercial, we'll book reserves, and gas market interest here we expect to be very strong, given factors such as the ACCC and AEMO announcing only in the last month or so that they expect material gas shortfalls in the east coast of Australia in only a few years' time. And of course, internationally, this asset can be connected to Gladstone and hence markets in the likes of Japan and South Korea. And those sorts of countries are intensely interested in gas sources from Australia, particularly after the war, which demonstrated to them that gas supplies that they had historically procured, particularly Japan from Russia, came with some material degree of sovereign risk. Yep. So moving to the Nongon CBM PSC, our most mature asset. This is a slide you'll have seen before if you've gone to these presentations. It shows the location of a very large production sharing contract adjacent to the Chinese border. We're in 100% of that. Over the last few years, we've been transmitting the coal seam gas skills that we have in Australia, which are pretty much the world's leader in coal seam gas at this point, into our team in Mongolia. Now, it's easy to forget, and for obvious reasons, and I do it too, that throughout much of the period of exploration over the last few years, COVID blocked access to the country, both for people and for equipment, and the fact that we've still managed to drill quite a number of wells in that period is a real testament to both our local team and our Australian team in providing online supervision rather than on-site supervision. The location here is well served by infrastructure in terms of, for instance, roads, now railway, electricity transmission, and local demand nodes in the form of large mines. Now, we commenced exploring at the end of 2019, made a first discovery in 2020, and commenced the country's first pilot production project in late last year. And then earlier this year, we passed a key production milestone of 200,000 cubic feet per day. So that extended pilot production test, its aim is to dewater coals and flow gas and provide proof of concept for a commercial development. Very simple pilot design, only 2 wells. Often in Australia, these can be 5 spots or indeed involve horizontal wells. The depth here is fairly shallow, less than 500 meters. We have a number of pressure monitoring wells in this region based on work that we've previously done. The pilot is intended to last for around a 6-month period to allow us to maximize the data gathering from that. The water production is very modest, which is important for, firstly, how quickly gas broke out here, which was very quick. And secondly, your ongoing economics. You got a lot of water, then you've got more cost in handling it all. That modest water production confirmed what we reported when we made our initial discovery of very high gas saturation in the coal seams. So we believe we are well on the pathway to commerciality. We won't make a formal declaration of that until the end of the pilot production process. Commerciality is not just a function of flow rates. There are a number of other critical factors which go into the commerciality equation. One of those is obviously gas prices, and in East Asia, gas prices are high, reflecting imports by boat from the likes of Australia, very long pipelines from the likes of Turkmenistan and Russia. And then the third factor are costs. Relatively shallow vertical wells of the type that we've drilled here are low cost anyway, and then costs in Mongolia are less than in rich countries like Australia. The graph here illustrates.
Yeah, in saying that, Neil, there seems to be, looking around the area of that Nongon play in particular, you discussed in the past about path of offtake agreements in particular for that, and being as well as the first mover in that sort of area of the initial agreements. It seems like there's other players around that are doing those sort of agreements. I know we're talking about commercialization here, but have there been chats like that ongoing, or has there been introductions or such going on with that? We just get a lot of questions coming through with regards to that, and I think a lot of the investors or potential shareholders are interested to hear how those sort of chats are going.
Okay, so I mean, clearly I can't disclose anything here that is confidential or is not already disclosed to the market. But what we have said before is that we see a number of different routes to market from this initial pilot area, one of which is turning gas into electricity. And we've engaged with the Mongolian government around that. The Mongolian government controls the electricity grid in Mongolia, and they would be the off-taker for any small initial generation project. One of our peers made a very good announcement earlier this week. They have an immediately adjacent local mine that they can sell electricity to. That is not the case for us at Nongon at this stage. Then there are potential mine developments, but there aren't any existing users here. So we would need to sell to the government, which would clearly be somewhat slower than selling to the private sector in any nation. What we are also looking at is moving gas by truck, either compressed or liquefied, and compressed is cheaper in capex terms, but volumetrically smaller, and that's probably our primary focus at this point. There are existing roads here, there are existing potential customers, and we are engaging with them. One that we've also mentioned is converting gas on site into ammonia. Ammonia's price has gone up substantially since the war, and also the value of security of supply has gone up again since the war. I mean, Russia and Belarus are large providers of ammonia. Mongolia is an importer of ammonia, which is the key ingredient in two things: really explosives for mining, and it's a mining-based economy, and secondly, fertilizers, and it's an agricultural-based economy. So there is likely strong political support for that, but that's probably somewhat less mature than for instance, the CNG and generation-based projects. In the end of the day, though, as I've hopefully consistently said, our job as a foreign junior is to acquire an initial asset, then undertake exploration and appraisal and early stage sales. Larger scale developments would need the balance sheets and capabilities of larger companies than us, particularly in an area like this. And so we see that our primary objective here isn't necessarily to be a large seller of gas ourselves, it's to be a successful participant who brings in the ultimate developer. And the lifting of COVID restrictions only a number of months ago in China has now provided means to more closely engage with what we believe to be the likely developers in the long term from China itself.
Yeah, that's great to hear. Thank you for that.
Okay, so and I'll probably just mentioned a few of these on these slides. So this year we will keep running this pilot for a few more months, and then providing we declare commerciality, work through regulatory processes which exist under Mongolia's petroleum law and do in any other country like Australia, whereby you start to convert the exploration nature of parts of the license area into production areas. We will prepare for pilots in other areas as our appraisal and exploration program goes ahead. Gas marketing I've spoken about. Our initial appraisal and exploration program focuses on appraisal wells numbering 4, focusing on Big Slope and Yangia areas where we've discovered very gas-rich coals in the past, and will continue exploration elsewhere. That program can be expanded through various government approval processes as we go through that through the course of this year. Okay, moving on to the hydrogen project. There are many different ways of playing the hydrogen space on the ASX. With probably at least a dozen companies pursuing hydrogen projects of various types. Our project is looking at being a green hydrogen producer, that is turning renewable energy into hydrogen and then selling it into markets. What Mongolia provides to underpin that is firstly what I can accurately describe as exceptional renewable energy resources. Secondly, and probably even more importantly, a market that is immediately adjacent and can be reached in the longer term by pipeline, not by boat. Countries like Australia desire to develop hydrogen industries, but they would need to export that either in a liquefied form as liquefied hydrogen, or into in effect a different chemical in the form of ammonia, which would be shipped again in a liquid form. So we think that these advantages make this a tier 1 location, and we think that was validated by the MOU that we, and now term sheet, we entered into with Japan's SB Energy. SB Energy is a 100% subsidiary of SoftBank Group. That's one of Japan's largest companies, and for those of you who've worked in the resource spaces will know there's nothing better than a Japanese partner, but it's very hard to get. So we thought there's a very significant endorsement of the region and of the strategy. We've undertaken pre-feasibility studies, and that have supported the maturation of the partnership into the recent term sheet. This area provides scalability. We aim to build a pilot initially, whereas if you're doing a marine-based export project, the costs involved are such, you have to do a multi-billion project or nothing. You haven't really got the opportunity for genuine scalability. So this map shows, again, location, immediate proximity to China. And one of the most significant factors here is the fact that China hosts around half the world's steelmaking capability. One of the most likely uses for hydrogen in the future is to replace coking coal in steelmaking operations. And the extent of the demand that would create is so enormous that our analysis, independent analysis, suggests that China will need to import hydrogen in the future, and there is no better location than this. As we can see, one could connect to, for instance, large steel mills in cities like Baotou and Hohhot through distances which number in the hundreds of kilometers, not thousands of kilometers. Hydrogen pipelines are technically viable. They exist in the US, they're being built in China, and we see that as being the longer term goal for this project. Again, our job as a junior is to develop the concept, to enter into, in effect, the equivalent of exploration and appraisal through the pilot, and then ultimately bring in the much larger partners who desire these projects. And what we've already seen is that large companies are desperate to find scalable and large hydrogen projects, and we consider that we've got one. The hydrogen delivery costs are the key to advantage here. To move methane from Australia to China costs around $5 a gigajoule. To move hydrogen to East Asia will cost you about 4 times more than that. So location is fundamental to competitive advantage. And here delivering by pipeline means that delivery costs are a fraction of that. So we think this is a very advantaged location because of its proximity to market. So SB Energy, I've been talking about that through the course of this presentation. They're a fabulous partner to have. It's been very pleasing to see the project partnership move from MOU to term sheet. Term sheet provides a framework to negotiate a binding joint venture, which we aim to enter into by around the middle of this year, at the point that we move to front-end engineering and design, that is FEED, for the pilot project. And SB Energy provide not only the huge balance sheet and that Japanese brand of quality, they also operate a fantastic wind farm in the location that we're looking to build our pilots. Just to put it into context, the wind yield on this wind farm is equal to the best in Australia, and in Australia there's more than 100 wind farms. So it's in effect top 1%, and Australia is one of the best countries in the world for these.
Yeah.
So in summary, what have we got happening in 2023? The Daydream 2 well, we aim to spud around the end of the year. We can't guarantee that given the likely utilization of rigs by others, but that is the likely date at this point. That's an extremely high impact well, and we think there'll be intense market interest in it as we go up to the spud date. In Mongolia, our pilot production test passed a flow rate which provided very strong support for a declaration of commerciality in the months to come. Our balance sheet is strong, and our 100% gas assets provide us the ability to bring in strong partners. And we think for a junior, there is no stronger endorsement of a project than who you bring in to join you in it. Our team in Mongolia and in Australia is highly experienced in gas, coal seam gas, and in other plays of the type that Daydream 2 will target. The Ukraine war highlighted for a number of parties the value of energy security. Now, if you're Japanese and South Korean, you see security of supply from an allied nation like Australia, and that underpins the acquisition of our Grandis gas project. But equally, if you're Chinese, you see the value of diversification, buying gas in the form of methane or hydrogen from Mongolia, if you're Chinese, is very low risk. Accordingly, assets located in that country will be favored by Chinese buyers and ultimate owners.
Yep.
The hydrogen project will mature, and we're aiming for feed entry later this year and a binding incorporated joint venture at that time, which again will provide, I think, a clear signal of value compared to ASX peers, and we'll be working hard to demonstrate that value more clearly. So that's what we've got coming up in 2023. We're obviously pretty excited about it on all of these projects.
Absolutely.
So
absolutely. And obviously, you sent out the announcement today with regards to the workover of the drills, and it's been, to be fair, it's not a big process. It's a very common occurrence, but more or less, I think what investors are looking for, we've just had a few questions asking at the moment, and anyone that's all attendees, if you want to submit your questions, time to do is now. We'll start answering a few of those. But obviously, back in 2021, we had a MOU with Clark Energy. Now, it's been a while since we've heard Clark Energy and the gas generator as per 2021 announcements. Is there any updates, or should we expect any updates coming forward from that? What are the plans with working with them?
So Clark Energy's role in this sort of process is as an engineer. It's not as a financier or ultimate owner. They have substantial skill in countries like Australia, but not exclusively Australia, in installing gas engines adjacent to early stage coal seam gas fields, and they've done that in New South Wales and in Queensland extensively. We sort of know them pretty well, and they've got that strong engineering capability which they can provide for this project. But the key for this project is offtake. That can only in this area be provided by government, and we also announced an MOU with the government on this too. Governments will be slower to mature MOUs into what's called a PPA, a power purchase agreement, than the private sector would be, but we are working on that behind the scenes. To be honest, I think that the compressed natural gas option that I mentioned earlier is something that can move quicker than a PPA with the government, because it involves the private sector rather than the public sector. So that is probably the quickest route to market at this point for this location.
Yep, excellent. Excellent. We've got a question here from Peter with regards to Grandis. Neil, you said that Grandis has the potential to be a company maker. What will the lead up to the drilling look like, and when will real news on it likely be starting?
Okay, so we are working intensively behind the scenes really on two main streams of work here. Firstly, the engagement of the drilling companies and all the ancillary services that are required, working with farmers on land access and things like that, and we will make announcements on those areas as they become locked in through binding agreements in the lead up to the spud of the well. We will also see what neighbours are doing. Now, if those neighbours are Shell, they won't be saying very much about what they're doing, but we will hear in this industry where there's only about 1 degree of separation, and people like drilling guys gossip like fishwives, and I'm sure they would acknowledge that themselves.
Yeah.
The second stream is really associated with funding, and that, for instance, relates to partnering. We think this asset is of the quality that companies substantially bigger than us are interested in it, and as and when we bring in a partner, clearly that will demonstrate firstly funding, but probably more importantly validation from people who don't enter into these sorts of deals lightly. Other forms of financing are also being pursued in countries like Australia, the government can provide sources of financing through, for instance, R&D credits that we see other people procure, and without guaranteeing anything, people would expect us to be looking at that very closely, and of course we are. So we see that those things building up step by step to a well which is drilling into a permit that we've already booked nearly half a TCF of discovered resource, a successful well that produces gas from the deep coals as well as the deep sands can increase that materially and be well on the path to booking reserves. And when you start to book reserves proximate to Wallumbilla rather than, for instance, in the middle of nowhere in the NT, then one can see very, very readily that that's going to be valuable. I didn't mean to be snippy there about the NT. I mean, best of luck to those parties that are working there.
Of course, yeah. We've got a few questions with regards to the Gombe Desert. In particular, given the PFS of the Gombe H2 by the ACOM has been completed, when are we expecting an update to come out to the market? Of course, excluding price sensitive or commercially sensitive information, this more or less the announcement, and this question's from Jacob, the announcement is long overdue.
Okay, so under the ASX listing rules, if you have a venture which constitutes a mining entity venture, then the rules via JORC prescribe very, very prescriptive and detailed disclosure on a PFS. Now, a green hydrogen venture is not a mining entity disclosure issue. So those investors who expect to see a lot of detail from a PFS, if it's from a mining venture, will not see that from a green hydrogen venture because it's not dealt with in the same regulatory way. And that's fundamental reason for that is if say you're a gold miner and you've got X ounces, those ounces are worth what they're worth on a globally traded commodity market. So the value of your project is really depending on what your costs are estimated to be under your PFS. Now, hydrogen is not yet by a long way a globally traded commodity market. And given the locational issues that I mentioned, I don't think it ever will be. So the costs in our PFS are highly commercially sensitive in negotiations that we have with potential off-takers. So accordingly, the disclosure under our PFS will be summary level only. The key outcome to note is that the PFS underpinned the entering into of the term sheet by a $100 billion Japanese company. That's the key milestone that entered.
Yeah, of course. Well, thank you for answering that one. We've got a few questions just coming in, and ladies and gentlemen, we do have a lot of questions to get through, but we might just answer these last few. This one's from Caden in particular. He asked, due to the past cash burn, how does EXR plan to acquire more cash to keep the CBM project funded?
Okay, as I suppose all juniors who don't have any cash flow, it's the CEO's job to say, I'm never going to go to equity markets ever again. But as a listed company, we do have that option at some point in the very, very distant future. However, I'd say that obviously on our Queensland project, through various mechanisms that I've outlined, we see funding as coming from third parties other than equity markets. On Mongolia, we have a 100% owned asset, and that provides strong optionality on bringing in other people, for instance, through farm-ins or other mechanisms like that. The Mongolian pilot project has been capital intensive, but typically the appraisal and exploration wells that we have drilled in the past have been and remain low cost, and we have slightly dialed back our number of wells this year to accommodate the funds available to us. And clearly we can ramp that up as and when we bring in others, or it's a favorable time to, dare I say it, ever go back to equity markets ever again. The hydrogen project can be funded in different ways. The interest of project financiers such as the Asian Development Bank and the European Bank for Reconstruction and Development, which have strong presences in Mongolia, for that sort of project is strong. So we see project finance for hydrogen as being far easier to procure than for methane, given the ESG and other drivers of large institutions like that at present.
Yeah, of course. Well, ladies and gentlemen, we might wrap it up there with those sort of questions. We're just running out a bit of time. Sorry about that. If we have any further questions, as you know, you can always get in contact with investor relations over with Elixir Energy. I think Neil's the guy to talk to as well. So if you want to submit those questions through, I'm pretty sure Neil will be happy to talk about that. But Neil, just before we leave, do you have any final comments? Obviously, shareholders and potential shareholders for the future are looking for just to know more or less about the timeline and what's going on. Is there anything that we should be looking out for leading into the rest of 2023?
Well, firstly, I'd like to say thanks again for hosting us, Port Jackson Securities. Thanks for current and potential investors for dialing in on a Friday morning to listen to me. Hopefully it's been interesting, and if you do have follow-ups, send questions through to to our general sort of email on our normal presentations, etc. And hopefully I've illustrated that there's quite a lot of developments occurring this year which have the potential to liberate a lot of value. I think that value liberation in some investors' minds is slightly confusing as we've moved from one asset to three. That's opportunities that we have seized here, we think are enormously value adding, but I'd like to emphasize they don't mean we've fallen out of love with our first child. We like all our children, where we think that we provided shareholders with new opportunities and risk mitigation here. Possibly makes the message less crisp, but again, we'll be looking at opportunities to maybe make it crisper, and without guaranteeing anything, that could, for instance, be spin outs, for example, of certain assets that would allow, I think, the more clear demonstration of value compared to like for like peers, for example. So I say that's just a concept. I'm not guaranteeing anything, and we haven't said anything to the market on that sort of thing. But I can rest assured that your board is thinking constantly about creating value through mechanisms like that, as well as through the intrinsic value creation of the projects themselves.
Absolutely. Well, Neil, it's been an absolute pleasure. Thank you once again for joining us. I look forward to having you on again. We'll maybe down the track a few more announcements and maybe some production along the way will be very exciting. But I think, ladies and gentlemen, once again, this has been another presentation by Port Jackson Securities. We look forward to seeing you in our next webinars as well. But apart from that, thank you very much, Neil, and everyone have a lovely day.
Thanks, everyone. Bye.